Hey everybody, how are you? This is Gene Marks. I'm glad that you are joining me for this very in-depth conversation I'm going to have that's going to talk about everything you need to know about the new stimulus. Now, for those of you that have attended some of my webinars before, see me discussing things online, you know that I like to have conversations, particularly things with other people going back and forth. But I will tell you that this new stimulus bill, we have a lot of detail and a lot of granular information that we are going to need to follow. So what I'm going to do is, you'll see less of me on video and more slides. This will be a sort of a PowerPoint driven presentation because I want to make sure that I get the facts out to you so that you have got, the information that you need. And it's very, very, very important that, that I am showing there. So, I think as I go through this, I'm sure you're going to have some questions. I mean, I'm pre-recording this right now. We're just a few days into this thing becoming really reality. So if you do have any questions, I'm going to ask you to email me. You can see my email address that's on the bottom of this, this slide right now. It's gene@marksgroup.net. You can also reach out to me at Twitter @GeneMarks. But if you want to email me with any specific questions that you might have regarding any of the stuff that I'm talking about, by all means, please bring it on. The second thing I also want to make sure that you guys are aware of is that, I'm going through a lot of different things. Some of it's going to apply to you and some of it is not going to apply to you. So, I will try and keep it even and move through it. But I just want to make sure that I've covered all the bases and that, all of you that are, that are attending this webinar, you might be a seasonal business, you might not be a seasonal business, you might be in the arts industry, you might be a minority owned business. There are certain things that are going to be specific to you. There are going to be things that generally apply to all and some things that won't apply to you at all. So, but bear with me because I want to make sure I go through and get through all this information. Again, email me at the end of this if you want a full deck of this PowerPoint or to ask any questions that you have. So that is what I'd like to make sure that we do. Also, these are just sort of a little disclaimer from my friends at SAP Concur. The act itself was signed on December 28th. It's an educational purposes only. This is not any of the statements that are being made here are not the responsibility of SAP Concur. I want to be clear. This is me communicating this information to you as I see it as a CPA. So if you got any problems, if there are any mistakes, if there's any errors or issues, that's on me. That's my fault. So that's if anything I missed out, anything I got wrong, which I don't think I got anything wrong here, but I've been known to get things wrong in the past. Come to me, and I will make sure that I write that and make sure that I get you the information that you need. And again, there's my email address and there is my Twitter address as well. Okay, so you ready? Let's jump into the stimulus and let's talk about the things that are going to affect you the most. And let's really kind of let's dig down onto these slides and talk about some of the specific things that I really want to make sure that you know. So the first thing is this. There is another round of PPP, the Paycheck Protection Program, but I want you to be aware that your company, might not be eligible for this round of PPP. So let's start off. First of all, just to make sure that we're clear, this is actually the third round of PPP. I mean, there was the initial round back at the end of March with the with the Relief Act, and then there was a second round that provided more funding during the late spring, early summer, and now that ran out, and now here we are with another $285 billion that's been authorized under this new stimulus bill that passed and was signed by the president at the end of December. Now, to qualify for another round of paycheck protection, you need to have less than 300 employees at a physical location. As I speak now, there is still some questions as to whether, what if you have 5 physical locations, each with 300 employees added, are you still eligible? Those rules still need to be clarified a little bit, but just so you know, the intent of this is for a small business, a company that employs less than 300 employees. So I don't think you should be getting wrapped up too much at a physical location. I think you want to be looking at your overall business overall, that it has less than 300 employees. That's really what the intent of this new round of paycheck protection is trying to do. The new loans themselves are at $2 million maximum. Before they were at 10 million. So if you want to get a new paycheck protection loan, or if you want to get a second round, you've already had a PPP loan, but you want to get another round of PPP, the maximum loan this time around is $2 million. If you do want to get a loan for a second loan, you have to prove that you have used up all of the first round money. That might mean that you're ready to apply for forgiveness for it, but you're going to have to provide evidence to your lender, because remember, your SBA loans that you're getting, these PPP loans, come through an SBA approved lender, not directly from the SBA. And by the way, if you want a list of SBA approved lenders, just go to sba.gov. You'll see right there where there's a whole database of SBA approved lenders. That includes banks and other institutions, including a lot of online lenders. But again, to get that second round, you have to provide evidence that you've used up your money for all of the first round. And the rules still apply. You can get, and I'll go through the calculation later, but you're entitled to 2.5 times your payroll over the past year, really. You can choose that 8 or 24-week period, just like you did before. So that's up to you. It's 2.5 times the same payroll expenses calculation that you were using before, which is your compensation of your employees, the $100,000 maximum annualized number for owners of the business, as well as related payroll expenses like group health insurance, that can all be included in that calculation. If you're in certain industries, you can actually get 3.5 times the payroll, and this is the industries that are entitled to 3.5 times the payroll that's allowed. So if you're in any one of those industries, instead of the 2.5 times your 8 or 24-week payroll period, you can use that 3.5 times. So again, the point of PPP is to target those companies that really need the most money. And again, those companies are smaller businesses, less than 300 employees, and ones that are really in those industries. So these are all the people that are eligible for PPP, and obviously there's a long list of them. I mean, most businesses, nonprofit organizations, housing cooperatives, news organizations, veterans organizations, tribal businesses, self-employed individuals, sole proprietors, independent contractors, co-ops. Even if you filed for bankruptcy, the rules have been loosened up a little bit so that you can receive and apply for PPP money. It is allowed. So these are all the ones that kind of fall under that umbrella. Now there are some specific companies that are not allowed to apply for PPP money under this new stimulus bill. People that are in the lobbying business, people that are affiliated with entities and the people's, with Chinese company. If a Chinese company has any ownership of your company, then you're unlikely to be able to be eligible for PPP money. Obviously, foreign agents, entities. We're going to talk about the Shuttered Venue Operator Grant Program. That's for companies that are in the arts industry. And if you're in the arts industry, there's special grants available for you. But if you take advantage of those grants, you can't participate in the PPP program. If you're a publicly held company, you can't participate in the PPP company program. That was obviously because of all the blowback that occurred because of people committing, larger companies getting PPP money in the first 2 rounds. And if you haven't started up your business, if you start up your business after February 15th of 2020, you can't get PPP money either. So it's really, if you've started up a business before that, even though there's going to be some challenges, showing evidence of payroll before that, if you did start up a business before February 15th, 2020, you will be eligible. You will be eligible. If you start up a business after February 15, 2020, you will not be eligible. Now, the big thing also is the revenue test. So as a recap, you got less than 300 employees. You can get the 2.5 times your payroll, or 3.5 times if you're in a certain industry. Certain companies are excluded, but you have to meet a certain revenue test now. It's not like everybody can apply for PPP. You have to show that you've been impacted because of COVID. And this is what the test is. You have to show evidence that you have a 25% reduction in your gross receipts in either the first, second, or third quarters of 2020. So these are evidence of like you've actually your revenues declined 25% in that quarter, any one of those quarters. It doesn't have to be all of them. It can just be any one of them compared to the same quarter in 2019. Now, you probably haven't filed your tax returns yet. So again, you're going to have to provide evidence to your bankers of what your gross receipts are. Those rules are still being clarified, but my expectation is it'll be cash receipts from your bank statement, maybe internal financial statements, something provided by your accountant that shows evidence of what your gross receipts are. Maybe even receipts that you measured because you filed sales tax returns, for example. Those kinds of things can be good evidentiary matter of what your gross receipts were in a quarter. But you're going to have to show that 25% reduction. The borrowers that if you were not in business, remember I told you about, if you were like a startup, up to February 15th, 2020, well, say you weren't in business, last year, but you started up late in the year. If that's the case, you can make the comparison to the fourth quarter of 2019. So if you started up this year and say your second quarter revenues really dropped, your benchmark is the fourth quarter of 2019. So you can use that as your comparison. It's just giving you a little bit of allowance to do that. All right. And then finally, any applications that come in, after January 21st, 2021, they're eligible to use that gross receipts from the fourth quarter of 2021. So again, I mentioned the first, second, and third, but obviously we're in January right now. So if you've got your fourth quarter numbers and your fourth quarter was bad, you can use that fourth quarter and use that of 2020 and use it to compare to the fourth quarter of 2019 as well. So those are what the revenue tests are that you've got to comply with. Okay. So some other things just to be aware with. Again, just want to make sure that you're, if you're a new company that formed before, sorry about the typo up there about 2020, the maximum amount of the PPP is either 2.5 times your average monthly payroll cost for any of that 1 year period, or you can use the average monthly payroll cost for 2019, but it can't exceed, you can't get a loan that exceeds more than $2 million in either case. Okay. And, remember, that monthly payroll cost is the number that you're going to use for forgiveness. So it's got to be apples to apples, and it will depend on what forgiveness period that you are choosing. So just as a quick recap to it, so you got to prove 25% revenues that you have lost any quarter in 2020 versus that corresponding quarter in 2019. You got to have less than 300 employees. You can't be a publicly owned company. You have to have started up your business before February 15th of 2020. And then you have to fulfill other requirements of making sure that you can get a first loan if you haven't had a loan before, and you can get a second loan even if you've had that loan before. And again, it's that 2.5 times multiplication factor still applies, but it applies if you're in the restaurant or the accommodation industry, you can actually get 3.5 times. Okay. Now, if you have an existing PPP loan, you do have the ability to request an increase in that loan, just so you know. Okay. So if because based on what your existing loan is, what it is, you're allowed to work with your lenders to modify that existing loan and get an increase. So rather than getting a whole new loan and start with that, if you only got a $200,000 loan, but because there were certain changes and you want to increase that loan, you have the ability to do that. So the new rule allows you to do that. Okay. Now, another big part of PPP, and we're still on PPP, has to do with forgiveness. So I was recommending to a lot of our clients to wait on forgiveness, and good news is that that actually came to be. So the actual definition of forgiveness, it's really been expanded. I mean, it's really taken a big change. And so what I want to do is I want to explain that to you what I mean by forgiveness. So for starters, if you want to apply for forgiveness when it comes time to apply, remember you still have 10 months after your period ends, after your forgiveness period, whether you chose that 8 or 24-week period, you've got 10 months to apply for forgiveness. You're going to submit the same expenses that you've applied for before for forgiveness. You have to show evidence of your payroll. your payroll related expenses, like your group insurance, life, disability, all of your rent and mortgage interest, those are your those are your forgiveness expenses. The same ratio applies. So it's that 60-40 ratio. If you're going to apply for forgiveness, 60% of your expenses have to be payroll, 40% it would then be non-payroll as well. But now more expenses are even allowed in that calculation. So if you have any software, cloud computing, or technology expenses, and that includes any type of like cloud-based software. And shout out to my friends at SAP Concur. It includes their software as well as SAP software because it's for accounting and HR needs. You can now include the costs of those technologies as a cost for forgiveness. If you suffered any property damage as a result of the disturbances that happened in many cities, in the spring of 2020 that weren't covered by insurance, you can put that through for forgiveness as well. Your supplier costs, which is pretty wild. I mean, these are things for really designed for like restaurants. If you're buying food, perishable goods, things like that, that can also be put in for forgiveness as well. Worker protection. So if you're buying and investing in worker protection gear, goggles, plexiglass, the protective equipment for your workers, those expenses are also now eligible for forgiveness. And these loans, by the way, these rules apply to all loans. So if you haven't applied for forgiveness yet on the first, 2 rounds of PPP, you can use these expenses when you apply for forgiveness on whenever that may be. And again, like I said earlier, that 60-40 cost allocation still exists. So the definition of forgiveness has been significantly expanded, which is really great news. And it is something that's now will make forgiveness a lot easier. But there's something else that's going to make it a lot easier. That something else is this: if you've got a PPP loan that's existing right now, or even a new loan that's under $150,000, guess what? You're going to pretty much have it forgiven automatically. Now, the Small Business Administration is preparing a form that it's going to be given to all of its bankers and lenders. So you're going to get from your lender this form to fill out, and it's like a 1-pager, and basically it's a certification that you did everything, you're in compliance, you spent your money on the forgivable expenses like payroll and whatever, and you're accurately representing and attesting that you do deserve to get forgiveness of your loan. And that's it. You won't have to provide documentation. You won't have to go through any more calculations or anything like that. Now, I still recommend that you keep your documentation around, and I hope that you're using good technology that saves all that documentation, because you're going to need it just in case you could be audited, or if the SBA suspects there's any fraud or anything like that, it could be something that comes into play. However, you don't have to go through all of that, and that's a huge relief for a lot of small businesses and a lot of their bankers at all, as long as you have a loan for less than $150,000, okay? Some other things, again, you still are required to restore those full-time employees from before February 15th of 2020. So your loan forgiveness, if you haven't restored your payroll by the end of your forgiveness period, whenever that is, then your loan forgiveness may still be reduced. Now remember, whatever's still left over on your loan, you can pay off at 1% interest rate. But the government really wants you to it's a paycheck protection program. They want you to bring back your employees. So that stipulation is still there. And like I said earlier, the SBA can still audit you if they suspect any funny business. So you do want to make sure that you keep your documentation for at least 4 years, okay? So by the way, I mentioned about that headcount restoration. It has been made a little bit more flexible, okay? So again, you got to be restored to its pre-February 15th levels, but you can use your levels from either the beginning of the date on the origin of your covered loan, or 8 to 24 weeks from origination. So again, if you've got, say for example, you've got 100 employees before February 15th, and then it fell to 80 employees. Well, at the end of your period, and you can use 24 weeks as your forgiveness period, from the beginning of that loan to 24 weeks at the end, you would have proved that you've restored your head count back to those 100 employees. And you do that you can attest to that basically if you have a $150,000 loan or less. And again, those headcount numbers don't have to be the same employees. They can be, replacement employees. And also, even if you offered somebody a job back and they refuse to come back, that can count as a recovered employee as long as you have the documentation to approve that. So that headcount restoration rule is still there. Another big part, I'm going to be finished with PPP soon, I promise, but another big part about PPP has to do with taxes. There was a big issue about whether or not PPP, your expenses can be deductible and the forgiveness can be, tax-free. And here's the good news: it's all tax-free right now. So you don't have to worry about that anymore. I talked about this on earlier sessions with SAP Concur, and I was really concerned for some clients that had, these loans and then they used expenses in these loans for forgiveness, and then they wouldn't be able to deduct those expenses, which means that they could have a tax liability because of that. That's all been changed. So in this new bill, your loan that you have, if you have a $100,000 loan and it gets forgiven for a $100,000 loan, that's not taxable. And if it got forgiven because you've submitted $100,000 in expenses, to get forgiveness for that loan, those expenses are still deductible. So you don't have to worry about any tax issues. Okay. So, guys, let's do a little bit of recap of what we've learned so far. Okay. So for starters, there is another round of PPP, but just remember, you may not be eligible, right? So when we talk about eligibility, just to recap, you got to have less than 300 employees. You got to have, you have to show a 25% revenue reduction in any quarter in 2020 compared to the previous quarter in 2019. You can't have started up your business after February 15, 2020. You can't be a publicly held company or a lobbyist or affiliated with a Chinese company. So there are those restrictions that are there. So it's really designed to get to small businesses that are really hurt. And remember that that other round, you can get, if you're in the restaurant or accommodation industry, you're even entitled to more money as well. If you have an existing PPP loan, you can request an increase for that loan as well. And forgiveness is another big part of this PPP in this new stimulus bill. If you have less than $150,000 PPP loan, whether it's first couple rounds or this round, completely forgiven, right? I mean, you fill out a certification. You said, yeah, everything I did right. I attest to that. You're forgiven. Even if you didn't, the number of expenses, the definition of expenses have been expanded. You can include technology like cloud computing expenses. You can use personal protective equipment. If your business suffered damages that weren't covered by insurance because of the protests and the disturbances back in the spring, that's also included. Even some of your costs for supplies from suppliers are now part of that forgiveness calculation, which is great. But just be aware that 60-40 ratio still holds. So 60% of your expenses still has to be for payroll. And like I mentioned before, anything under $150,000, immediately forgiven, which is really good news. Okay. And finally, you don't have to worry about taxes anymore. We were worried about that before, but your loans that are forgiven, completely not taxable, and your expenses that are included for forgiveness, you can deduct them. Go ahead and deduct them as well. It's all good. You can file your tax returns. It's all fine. So you don't have to worry about that as well. Okay, so let's now move on to some of the other things that are in the stimulus bill. Okay, for starters, there is special help if you are a minority-owned business. Now, there's sort of two stipulations when I talk about minority-owned businesses. The first is that you have to be minority-owned. So that's more than 50% owned by a minority. Female-owned business, Black-owned business, Hispanic, Latino-owned businesses, Asian-owned businesses. Those are sort of the big four that fall under that qualification. But you also, Native American as well, by the way, you also need to be located in a low to moderate income area of the country, which basically means that the average income where your business is located is anywhere from 50 to 80% of what the average income is in the surrounding areas, or what's used for the definition of poverty levels. you have to talk to your lender and ask, are we located in a low to moderate income area? A lot of urban areas in major cities around the country are considered to be low to moderate income area. The issue that the government faced in the last round of stimulus is that not enough minority businesses got help. Um, the money did not reach them. The education, the outreach was not sufficient enough. And frankly, a lot of the minority business owners, frankly, did not step up to get the help that they needed. So now there is a real push in the stimulus bill to get money out to those minority business owners. So there has been set asides $15 billion for initial PPP loans and $25 billion for that second PPP loans, specifically for minority-owned businesses with 10 or fewer employees that are located in low to moderate income areas for loans up to $250,000. So, if you're located in those areas, those are absolutely, you've got money that is specifically the lenders have been told you have to lend out. This is money specifically dedicated to those people, so you have to be able to take advantage of them. In addition, there was another $15 billion that's set aside for small community banks, credit unions, small agricultural credit institutions, and another $15 billion for a lot of these community lenders like CDFIs and CDCs and MDIs and these microloans that come from the SBA. All of these lenders, by the way, are going to have reporting requirements back to the SBA to show what they did with that money, that they took that money that was allocated to them and they got it out to these minority-owned businesses. So if you're a minority-owned business, if you're located in that low to mid-moderate income area, you should be reaching out to any of these organizations and saying, hey, listen to me, I'm here, I'm in this area, I'm minority owned, and I want, I'm entitled and I want some help here. And I want you to know that the help comes in loans, but some of this money to some of these companies are also for educational and consulting and other resources as well. So I just want to be sure that you are reaching out and you are saying to those banks. And again, if you're a minority-owned business, if you're located in this area, sorry, but tough love here. The onus is on you. And in fact, I'm going to put on my video one more time just to make sure that I am super clear about this, guys. All right, you're a minority-owned business. You're in a low to moderate income area. These bankers want to help you, and the government has given them money and said you got to get the money out to these people. So they can't find you. I mean, they don't know who you are or where you are. Pick up the phone or get on your computer and reach out to these organizations and get the money that is due to you. I just want to make sure that message is coming in and that it's clear. One final thing is that there are special grants for minority-owned businesses under the Economic Injury Disaster Loan Program. I'm going to talk about them in a minute, but these grants are some real interest. They'll be of real interest to you. Again, if you're a minority-owned business and you're located in a low or moderate income areas. Okay. Very quickly, if you're a seasonal employer and you want to be classified as such, because then the rules, for getting PPP loans and other kinds of help, there's new definitions of a seasonal employee. Okay, so I'm not going to read through all of this or spend a lot of time on this, but just so you know, your PPP loan calculation has been changed and updated a little bit to match if you are a seasonal employer. So the slide is here. Maybe take a screenshot of it, but if not, email me and I'll send you these slides as well if that applies to you. Now, I mentioned earlier about the Economic Injury Disaster Loan Program, and it is certainly alive and well. And now there are some grants available under it that, particularly if you're a minority-owned business, you need to definitely be aware of them. Now, let me just recap what these loans are so we're all aware. Okay, these are $2 million loans, up to $2 million that you get directly from the SBA. You have to prove that you're in a disaster area and the entire country has been declared a disaster area because of COVID. You don't have to necessarily prove that your business has been impacted by COVID. Just the fact that you're in the disaster area makes you eligible for this loan. These loans, again, you don't go through a banker, you go directly through the SBA. They're 30-year terms at 3.75% interest for-profit companies. If you're a nonprofit, it's 2.75% interest. And like I say here, it's administered directly through the SBA, not through lenders. 20 billion more dollars have been allocated to this program. So be aware that there's more money there for you. And new rule, you can get an economic injury disaster loan even if you have a PPP loan. So if you have the PPP loan, don't worry about it. You can still apply for an EIDL. You're still eligible for it. So go and take advantage of it. Now let's talk about these grants. Now, when you apply for an EIDL, there are these grants available. It's $1,000 an employee up to $10,000, and that's still eligible for most employers when you apply. The SBA, it has about 3 weeks now under the new rules to determine your loan eligibility. Regardless, you're still eligible for this loan, for these grants. So when you apply for an EIDL, if you do get a grant, you don't have to deduct that amount from your PPP forgiveness anymore. So before, in the old rules, if you had a $100,000 PPP loan and you got a $5,000 grant, you could only get forgiveness for $95,000 of the loan. Now you can get forgiveness for your entire amount of your PPP loan. So you can get an EIDL, an economic injury disaster loan, and it's completely separate from PPP, and you don't have to deduct any grants that you received under this loan against your PPP forgiveness. So that's good news. There are some great opportunities, again, if you're a minority business located in a low income community. Before, if you, well, first of all, right now, you can make a special application to the SBA for a straight out $10,000 grant. So again, if you're in one of those low or moderate income, areas, and you apply directly to the SBA, you say, this is where I'm located, I'm entitled to this advance. You can get an automatic $10,000 advance, whether or not you get approved for a loan. It's just a grant program that the SBA is giving out to businesses in low to moderate income areas. Strongly recommend that you jump on SBA.gov and apply for those grants if you're located in those areas. Also, if you're located in those areas and say you got an economic injury disaster loans before before everything closed down last time, but you didn't get the full grant that was entitled to you, you can now go back to the SBA and they will make good on your grants. They're not doing that for anybody else but people that are in the low income areas. So you can say to them, listen, I was entitled to a $10,000 grant. I only got $2,000. Give me my other $8,000, and the SBA will make good on those grants as well. So economic injury disaster loans and grants directly from the SBA, big opportunity for companies, all companies that are there, but also even greater opportunities if you're a low income or moderate income place. Now, speaking of grants, I mentioned the arts industry. People in the arts industry could not participate in the Paycheck Protection Program, and there's a big reason why. Because there's like a special grants program available just for you in the arts industry. $15 billion has been allocated to this in the arts industry. Okay, it is for live venue operators and promoters and theatrical producers and motion picture. If you're an independent film company or an independent theater, or even if you're a talent representative or you're an actor, all of these people are now up to, as long as you can demonstrate a 25% reduction in employees, in revenues, with special amounts set aside for people that have less than 50 full-time employees, you apply to the SBA. Look on SBA.gov for that. They can give you a grant up to $10 million and a supplemental grant equal to 50% of the initial grant. So it's a total of a potential $15 million that you can get as long as you certify that you're going to be using that grant money for things like payroll and rent and utilities and personal protective equipment. So it's called the Shuttered Venue Operator Grant Program. This is not a PPP loan that you then apply for forgiveness. It's basically money that's handed out to you from the SBA if you're in the arts industry directly, so that you can use it for those purposes. So be aware that's another big opportunity that's available for you under grants. There's also, some real incentives for other SBA loans, and I want to make sure that we're really clear on what these incentives are. Say you haven't been struggling this year. Say, like many millions of businesses, you've navigated through this year. You've been making, you've been doing okay. That's fine and good for you. This stimulus bill has a provision for you. Not that they understand that a lot of businesses have worked their way through COVID and through this recession, but they want to help you to position yourself for growth. So completely separate from PPP, there is another huge forgiveness program that's part of this bill that you should be aware of, and it has to do with SBA loans. Now, first of all, this program, this forgiveness program for SBA loans, applies to all businesses, okay? And it applies to what's called Section 7A or 504 micro loans. Now, Section 7A loans and 504 loans, you can get up to $5 million loans. The micro loan program is a $50,000 loan program, and you can use this money for working capital, for inventory purchases, for property, to buy buildings, even to buy a competitive business as well. It's basically that loan program. The loans themselves are guaranteed by the banks, by the government, and they're issued through SBA lenders. The SBA has increased their guarantee to 90% from the usual 75%, and they're waiving all fees, their guarantee fees, which could be significant in a lot of cases. So these banks have every incentive to get these loans out there to existing businesses. Now, again, you got to go through due diligence, show prior history, maybe tax returns. You're applying for a legit loan through a bank that's guaranteed by the government. But first of all, if you have an existing loan, say you've already done this already, you can get 8 months of forgiveness on your principal and interest payments. 3 months if you have an existing loan, plus an additional 5 months if you're in an industry like food services and accommodations and arts and entertainment and recreation and some of these others that I've got listed here. You get up to 8 months of your principal and interest payments completely forgiven, up to $9,000 per month. If you want to apply for a new loan, you can do that too, and you get your first 6 months of principal and interest up to $9,000 per month also forgiven, as long as you get it done and approved by September 20th of 2021. So an enormous benefit here for SBA loans right now. And again, you don't have to be struggling, you don't have to be affected by COVID, you don't have to be in a bad situation. These loans are to stimulate you so that you get out there and hire people and buy assets and grow your business, because there will be a recovery and it's going to come soon in 2021. And when that happens, they want to make sure that businesses themselves are affected. By the way, I say it applies to all businesses. It applies to businesses with less than 500 employees, because that's what's under the SBAs. Okay, so let's talk about what we've learned, and just so that we do this kind of a recap. We talked about that if there's another round of PPP, right, but you may or may not be eligible, you can request an increase to your PPP loan. The forgivable expenses, that definition has been greatly expanded, which is great news. If you've got less than $150,000 PPP loan, you'll pretty much get automatic forgiveness. And you can deduct your PPP forgiveness expenses now. So it's not a taxable event anymore, which is really great news to a lot of people I know. A few other things. There's special help for minority-owned businesses, very, very important. People that are in low and moderate income areas. Seasonal employers are more fully defined. So if you're, so that they're applicable for PPP. The economic injury disaster loan program is alive and well, and so are the grants that are available under this program. And if you're in the arts industry, $15 billion of grants that are now available to you in the arts industry, so that you can't participate in PPP if you do this, but you can get up to $10 million grants, actually up to $15 million grants depending on what your needs are. So that's, theater operators, actors, agents, people that are in that industry that can prove that they've been impacted by COVID. And finally, whether you've been impacted or not by COVID, you have got some great, great loan programs that are available for you for forgiveness. So again, 7A loans, 504 loans, and micro loans. All of those, if you get those loans, if you have existing loans, you can get up to 8 months of your principal and interest forgiven. If you have a new loan, you can get up to 6 months of principal and interest forgiven under that. So fantastic program from the SBA, and that's also really good news. Okay. In our final sprint here, let's talk a little bit about taxes, okay, and what's impacted for you by taxes. So the first thing I want to explain to you is the employee retention tax credit, because there's been a lot of changes. Now, let me just, before I go into the details of this impacts companies. Here's how you can take advantage of this tax credit. Number one, you have to be of a certain size company. But number two, and most importantly, you have to show that you have been impacted by COVID, okay? Like had a significant revenue loss, which I will show in a minute. And even that you've done that, if you've kept your employees on, you're eligible for a credit against the FICA taxes that you've paid, the employer's share of your FICA taxes. So if you're less than 500 employees, if you've been significantly impacted, you've had revenue loss because of COVID, and or you've been shut down, and you've got you can get a tax credit against your Social Security taxes. So let me explain to you. This was in effect before, and now it's been updated. So for starters, the employee retention tax credit now expires on July 1st of 2021, which means you've got 2 quarters of 2021 where you can now continue on. Okay, it used to be eligible for companies with less than 100 employees. Now it's less than 500 employees. If you show that your business was shut down at any time since COVID, since the beginning of all this began, by the state, local governments, whatever, then yes, you are eligible for this employee retention tax credit. Or if you show a revenue loss, and that revenue loss is in a quarter, 80% revenue loss versus 2019 now is what the rules are. Your wage cap now is $10,000 per quarter per employee, which means that you can take 70% of the wages up to $10,000 per quarter. So that's $7,000 per quarter now, or $14,000 if you do it for both quarters of 2021. That you can put against against your FICA taxes that you paid in, and whatever is excess, you can get that back as a refundable tax credit. So it's a big credit that you can take advantage of for keeping those employees on your payroll, and you can put the money in your pocket. Now, even if you got a PPP loan, now you can still participate in this program as long as you have, and this is going to be a bit of an accounting trick you're gonna have to do, but you can't use the same payroll that you're using for forgiveness for PPP and also claim for the employee retention tax credit. Okay, retroactive, you can use this going all the way back to 2020. If any of this exists, you can use these same new rules now back to 2020. But in your employee calculations, the group health insurance is now is considered to be compensation. So big changes to the employee retention tax credit. I know there's just a few people that really may be able to take advantage of it, but it's a giant credit that you're able to take advantage of. Now, in addition, you also have the ability to borrow money, essentially tax-free or interest-free, from the government by deferring Social Security taxes. Now, different than the employee retention tax credit, if you don't want to pay your Social Security taxes, you don't have to. This is your employer's share of Social Security taxes. This applies to any business, okay? You can, and it applies only to that FICA Social Security taxes. But now through March 30th of 2021, you can just not pay it. You can do this through this quarter that ended, and also through the March 30th, quarter that ends. And therefore, you can not pay the Social Security tax. Then you'll have to pay it back 50% by the end of 2021, and 50% by the end of 2022. So that's been pushed forward a little bit, and that's good news. Okay. In addition, the Work Opportunity Tax Credit has been extended. This is a tax credit that is available. It's been extended through 2025. It's a $9,600 credit that applies if you hire a veteran, long-term unemployed, welfare recipients. By the way, long-term unemployed is 6 months unemployed, and a lot of people would probably qualify. If you hire any of these people, you can get up to a $9,600 credit on the income that you're paying them, or what their salary is on your next company's tax return, which is huge. So you can use that to your advantage. That is something that has been extended to 2025, and that seems like a really big plus. The meals deduction has also been increased. The meals deduction is a deduction that you can take now 100% through 2022. It's meant to hopefully benefit the restaurant industry. And charitable contribution incentives have also been extended. So this is good news if you're a nonprofit. So through the end of 2021, people that do $600 for those married filing jointly, $300, this is over and above the standard deduction. They can take that and now donate to charity. So if you're a charity, you should be pushing that out so people can get that added charitable deduction on their taxes. That's a big deal, and it has been a big deal for a lot of charities at the end of 2021. So, okay, so let's recap again. There's another round of PPP, as we know, but you may not be eligible. If you have an existing PPP loan, you can request an increase. Just recap on those two things. You got to show that you've had revenue loss, that 25% of revenue loss, have less than 300 employees. That way, not be certain like of ineligible businesses like lobbyists or affiliated with China. You can get a second round of PPP. And even if you have that first round of PPP, you can request an increase. Forgivable expenses. There are a lot more expenses now that are considered to be forgivable. It's not just payroll, rent, and mortgage. It's also PPE expenses for personal protection. It's expenses for that you might have incurred because of the disturbances. It's technology expenses for cloud computing applications. They're all considered to be forgivable now, so you can include them in your calculation. However, if you got a loan for less than $150,000, you don't even have to worry about it. You're going to fill out a one-page certification form and attest that you've used the money for the right purposes, and therefore you're going to be automatically forgiven. But maintain your documentation for at least 4 years, all right? You can deduct now your PPP forgiveness. You don't have to worry about it. It's completely non-taxable. There's specialty help for minority-owned businesses as well. If you're in a low or moderate income area, you want to apply for that. There's special grants, there's special set-asides of money for you in those businesses. Seasonal employers are more fully defined if you fall under that calculation. You can now continue to get loans from the Economic Injury Disaster Loan Program up to $2 million, 30 years, 3.75% interest. And the grant program is back specifically for those businesses in the low to moderate income areas, can get $10,000 grants just by applying for the loan. So that's good news for them. If you're in the arts industry, $15 billion has been set aside to accommodate the arts industry, which is fantastic. And you're entitled to get up to $15 million yourself, depending on if you qualify. But it's really anybody that's in that industry that can prove that they've suffered because of COVID, had revenue loss, can get grants, straight up money that you don't even have to pay back. The SBA has some amazing loans that are out there for all businesses under 500 employees that want to expand Section 7A loans and 504 loans, and you can immediately get forgiveness for the first up to 8 months of an existing loan or 6 months for a new loan if you get it approved by September 20th of 2021. The employee retention tax credit has been expanded as well to include more. Deferred Social Security taxes still there. You can defer your Social Security tax. The employee retention tax credit has been extended, so that's amazing to 2025. When you hire new employees, keep that in mind because you can get up to a $9,600 tax credit for hiring new employees this year, particularly long-term people that have been unemployed for more than 6 months. So just bear in mind that that's all available for you. And in addition, the meals deduction has been increased. You can now deduct 100% of your meals. That helps the restaurants. And finally, if you're a nonprofit, people can now individually, jointly donate $600 and take a deduction for it over and above their standard deduction, all for, excuse me, 2021. So if you're in the nonprofit industry, you should definitely be focusing on that. Okay, so this is my email address, gene@marksgroup.net. This is my Twitter account, which is @GeneMarks as well. I want to make sure that you've got that and that you can email me with any questions. If you'd like a copy of this PowerPoint, I am more than happy to send it to you. I'll be updating it as more information comes in as well, but I just want to make sure that you get the information that you need. So having said that, just want to thank all of you guys for for attending this. I hope that this information was helpful to you. There's a lot to keep in mind. Remember, whether you've been affected by COVID or not, there are still incredible benefits and advantages because of the stimulus bill. So, my smartest clients, they're talking with their financial advisors and making sure that they take full advantage of the benefits that are out there. So, thank you very much for joining me. I really hope that this information has helped you and get a better understanding of what's going on. Again, my name is Gene Marks. I'm sure I'll be seeing you in the future. Best of luck over the next few months. They're going to be tough, but we'll be looking for recovery in the second half of 2021 and can't wait for that. Talk to you soon.